In the big news of the day, S&P Global has raised India's sovereign rating to BBB from the previous BBB minus. Let's remember that BBB minus is in fact the lowest investment grade rating. Now, what this essentially means could be lower borrowing costs for the Indian government, also lower borrowing costs for corporates from India that are borrowing from abroad. We in fact already saw a little bit of a reaction on the India 10-year benchmark bond yield, which did ease by 7 basis points at its close today. Let's have a quick overview of what S&P did say in its release when it changed the rating. Now, it did emphasize that India has continued to prioritize fiscal consolidation, and the government has demonstrated continued political commitment to delivering sustainable public finances. S&P also did make note of the improvement we have seen in the quality of spending as well, while the government continues to maintain its thrust on capex. Now, robust economic expansion is also having a constructive effect on India's credit metrics, the global ratings agency said, and it said that it expects India's economic fundamentals to continue to underpin the growth momentum over the next 2 to 3 years. S&P does estimate GDP growth for the ongoing fiscal year at about 6.5%. It has also added that it does not expect the impact of the tariffs imposed by the US on India to be substantial. It does not also expect the impact of the tariffs to be long-term in nature. Now, in terms of outlook, S&P has said that continued political stability and high infrastructural investment continue to support India's long-term growth prospects. Added to that, a cautious fiscal as well as monetary policy is expected to help regulate the government's elevated debt and interest burden, and that's what is going to be watching out for as well. In fact, we spoke to the team at S&P regarding what could possibly help improve India's rating further, and what they said to us as well was also the fact that fiscal consolidation is what they're going to be watching out for, and a faster pace of fiscal consolidation is what is most likely to get India a further upgrade.
We're looking at the rating and the fiscal outlook. This is a big rating coming in for India. So give us a sense of what specific fiscal milestones or policy reforms is S&P monitoring for this upgrade in India's sovereign rating?
Hi, good evening. Thanks for having me. Yeah, there were a few factors that we were looking at when we decided to act on the positive outlook and upgrade the ratings. The first thing, as we mentioned earlier, was really the government's demonstrated commitment to fiscal consolidation. The second factor that we were looking at was also the fact that nominal GDP growth continues to be very healthy in India, and this healthy GDP growth is actually helping to steady a lot of the credit metrics, especially given the fact that, despite the fact there's still there is some fiscal consolidation, deficits are declining, but it's declining at a very slow level. So this fast GDP growth has helped to stabilize the debt level of the government, at the same time also to gradually bring it down. The third factor that we saw was very important was the monetary policy settings and its development, how inflation has been controlled at a much durable rate over in recent years, and that we think speaks forth to the increasing strengthening transmission mechanism from the RBI.
What's the one metric you'll be watching most closely for India in the next fiscal year?
Right. Yeah, great question. I think actually we pointed it out in our outlook statement. It will probably be the deficit that we are watching out for, how quick the pace of consolidation is. One thing also we're also watching out for is the pay commission's recommendations to see how what kind of deficit level we're going to be talking about, recommended by the finance commission, and also in terms of its recommendations to states and also to central government in terms of the revenue sharing arrangements and things like that. So we'll all be watching out for that as well. But in our outlook statement, I think we put very clearly that future potential upwards will continue to rely on, will be dependent on India being able to keep up its fiscal consolidation efforts, continuing to focus on its infrastructure investments. Also at the same time, having a very conducive monetary policy environment and having inflation being kept under control as well.
Let's also now play out this very exclusive interview that NDTV had with Amitabh Kant on the kind of impact, if any, Trump tariffs will have on the Indian economy. Listen in.
Something that everybody's talking about and it's on everyone's minds is the recent US tariff hike and of course the impending geopolitical volatility and because of that. And I think in the past you've called the hike a once-in-a-generation opportunity for reforms. How do you see this upgrade aligning with trade challenges posed by the 50% US tariffs? What does it signal about India's economic resilience? We just spoke with S&P director just a few hours ago, and he's of the opinion that there's not going to be any impact in India's growth because of these tariffs.
Well, he's absolutely bang on that. First of all, I think the nature of tariff, you look at Trumpian tariff, one day it's 25%, next day it's 35% in the case of Canada. In the case of Brazil, it was 25%, raised to 50%. In our case, he's put in, because of Russian oil, it shows the level of hypocrisy that China buys more oil than India does. Turkey buys more oil than India does, and yet you have slapped 25% on India, which is absolutely bizarre to my mind. My view on that is that India should never lose its, strategic autonomy or its energy security because of this policy of Trump. Because 2.5 decades we've pushed for, both bipartisan in the United States of America has pushed for closer relations. Whether it was Democrats or Republicans, they pushed for closer relationship with India. And so has India pushed. It was an evolving process for the benefit of both countries. It has to be done with mutual respect. You can't just slam India down like this. And if you succumb now, you'll keep succumbing throughout, and it'll have long-term repercussions in a very big way. So my view on that is very clear, that we need to be, it'll have very little implications, but it is also a huge opportunity for India to carry out very vigorous reforms in its economy. I mean, we need about 10, 12 states to grow at high rates, so we need to push the states. We need many more large companies. But we need to become very easy and simple, and we need to make a simplification in GST and many of our regulatory regimes and push for digitization and carry out massive amount of process reforms. It's also an opportunity to carry out reforms in the judicial system and carry out reforms in the dispute resolution mechanism. You'll never get this opportunity again. This is the opportunity. This is a once-in-a-generation opportunity for you. Trump has given us this opportunity. We should seize it. We should not let it slip.